Okay, so what is bank reconciliation? Well, the key word really is it's kind of right here. So reconcile, reconciliation. It just means to make things balance or make things even, right? If you get in a fight with a friend, you want to make up with them or reconcile with them. So the deal here is that the bank and the company, they're kind of just not on the same page. Like they're not communicating properly, where there's going to be differences in their books. So that's kind of the main thing here, is that there's going to be differences in their books. We're really just focusing on the cash balance. And so the idea with a bank reconciliation is you're going to actually make adjustments to both sides, so both the bank and the company, to balance, make it even, so to speak. So there's a lot of different adjustments on both sides. And the hard part about this is you have to know where you place each adjustment. Some adjustments only go on the bank side, some adjustments only go on the book side. And at the end of the month, really, or the end of the period, you want them to balance. That's the idea. So you make adjustments to balance each side. And so there's going to be stuff involving credit memos, something called outstanding checks. I'm sure you've heard of that. And I'll go over these terms in the next slide here. There's stuff like something called deposits in transit. And there's even errors. So the company sometimes makes errors, the bank makes errors, and you have to correct those errors. And that can be the hardest part, to be honest. A lot of my students struggle with error correction. So what we're going to do here is I'm going to go ahead and show you kind of how this is set up, some of the different terms involved. So here's some of the rules down here. So some of the rules, and we'll just go over some of the bigger terms. So first off, outstanding checks. What is that? Well, think about it like this. Think about the company issues a check, right? When you issue a check, your cash balance goes down. But the bank, they never got that memo. They're like, "Oh, I didn't know you sent a check out. We never got that. So we didn't reflect it on our side." So basically, a good way to put it here is that the company issued a check. Oh, sorry. Check. But bank never got it. So that's kind of the deal. The bank just never got the memo. They're like, "I didn't know you issued a check." Same thing with deposits in transit. So deposits in transit is basically the opposite of an outstanding check. The company went ahead and deposited a large cash amount on their side, but the bank never got the memo. They said, "I had no clue. Like, I didn't know you got more money. Why didn't you tell us?" So that's what's going on there. I don't need to write that out. So what happens is the bank needs to add that from their side. So add to bank side. And on this one up here, you're going to subtract from the bank side. Another big one is errors. So this is going to be the harder one, I would say, because you have to look at where the error took place. Was it on the bank side? Was it on the book side? And if so, what does it involve? Did they overpay? Did they underpay? Did they add more to their balance than they should have? And so that's going to be the hardest part. And we'll go through errors in this big practice problem. I'll show you how we do it. But beware of that. Usually on problems, they'll say like a check was issued for this amount, but they recorded it here. Or the bank miswrote the deposit. They wrote it for this much when it should have been this much, etc. And the idea is you want to look at the differences. So the difference between correct amount and recorded amount. So how much did they record it for, but how much should it have been recorded for, etc. That's very important. And those are some big rules here on this side. So let me scroll down here to the next. So how do we set it up? So I went through some of the more important terms. There's others, but we'll go through the remaining of those in the problem. But how do we set it up? Well, basically what's going to happen is we'll do the bank side over here and then the book side over here. Book side just means the company side. So with the bank side, you're going to take this balance, whatever they started with, the cash balance, and you're going to add in deposits in transit, you're going to also, actually that's one of the bigger ones. If there's any errors, that's another thing that will be added. It just depends on the error though. So let's just say, I'll say you'll add a bank error, and only if that bank error understated the account. I'm going to move down a little bit so we can see more. Yeah, understated. So that makes sense, right? If they understated the balance, you'd have to add back what you messed up. Then you're going to subtract what we call outstanding checks. We mentioned that. And those are some of the bigger ones you'll see on the bank side. And that's just going to equal basically your adjusted balance. And that's the balance we want to equal on both sides. Okay. Now over here on the book side, there's some more, but we're not going to go through all of them. So you start with your balance. You'll add in any notes and interest. So what happens there basically is that sometimes the bank will receive a payment from a customer or receive interest from a customer, and then they tell the book or the company, they're like, hey, you just got some money from a customer, make sure to add it to your books. So that's what's happening here. You're going to add in any error that understates, so same as the bank side. And then also, you're going to subtract any type of service fee. Sometimes the bank will give you a fee, which we all hate fees, but sometimes that happens. So the book needs to get that memo to be like, oh, okay, I need to subtract that. And also, you'll subtract any errors that overstate. Because if it overstates that balance, we have to subtract it, and that's going to equal our adjusted balance. So there actually is a few more items, but I'm not going to go through all of them here. But this is the main gist, the main formula for each side. Now what we're going to do now is we're going to go and practice a problem using all of this. So let me scroll down here. So this practice problem is large, so it's taking up the entire whiteboard. What I'll do is I'll go to another whiteboard that's more clear, and I'll write everything out, and I'll reference all the information over here. This one's a long one. So let's take a look. COVID Corp reported a cash balance at the end of June of $24,567. However, the bank's cash balance was $19,486. So that's important because now you can see the beginning balances were different on each side. They need to reconcile the differences. During June, COVID issued 2 checks. For one for $13.45, that's check 906, and 907 was for $2,566. So the bank has not heard of such checks. That's a hint. Additionally, COVID had a large deposit from a customer for $12,127. The bank never got the memo. That's a deposit there. The bank reported a note collection and interest for $3,250. Also, a service fee was applied for $25. COVID had issued a additional check 908. They had issued it for $870, but recorded it for $780. Interesting. So the main thing here we got to do is prepare a bank rec. So there's a lot of numbers here. So what I'm going to do is I'm going to jump to another whiteboard and I'm going to reference this whiteboard with all the information. So bank balance and book balance. So right here, this is important. So this is how you're going to set it up to get down to your adjusted balance. Now the first thing we start with is the bank balance, and that's just going to be your cash balance right here. And I'll put that on both sides. So what was our balance? Let me scroll back. Our balance was 24,567 for the book side and 19,486 for the bank. So 24,567 for the book. And I think the other one was 19,486. Okay. So that's where we start. Now from here, we're going to go ahead and add certain things. We're just going to start with the bank side. Now we know we're going to add any type of deposit in transit. I'll just call it deposit for now. Let's try to find some if we have any. So I saw a deposit right here. COVID had a large deposit from a customer, but the bank never got it. So that's a deposit in transit. The bank never did it. It's for 12,127. So write that in here. Now next, was there any outstanding checks? Because that's important here. I'll call it just outstanding. Yeah, I'll call it outstanding checks. So let's go take a look. Well, if you remember, right here it said during June, COVID had 2 checks, 906, 1345, 907, but the bank had not heard of it. Those are important. So 1345 and 2566. So 1345 and 2566. So we're going to have to subtract those out. Now I don't see any errors on the bank side. This error down here, I'll give you a hint, is actually on the book side. So we have to correct it there. But there's no errors and there's nothing else. So all I see is this for the bank side. So let's go ahead and add it up here. So equals, and then now you're going to take 19,486. You're going to add in 12,127, but you're going to subtract 1345 and subtract 2566. There we are. So our final balance that we should get for the bank side is equal to 27,702. That's important. Now let's tackle the book side. So the book, all I see for the book side, we covered everything up here in this top section, but I did notice that the bank reported note collection and interest for 3250. So we need to add that. So we'll add that in. I'll call it N and I, so note and interest, and I just forgot the number. 3250. So let's add that in here. 3250. Now what else do we have? So from the book side, I did see there was a service fee, so we have to subtract that. Fees suck. That's for 25 bucks. So let's subtract, call it SF, $25 there. All right, and let's see what else we have. Well, there was that error. Remember at the bottom here? There was an additional check for $870, but recorded it for $780. So what happened here was that COVID just recorded it wrong. It should have been for $870, a total cash outlay of $870, but they recorded it for $780. They mixed up the two numbers there. So they didn't record it for enough. It's not enough cash going down, right? It should have been $870, but they only recorded it for $780. So they were off by, looks like 90 bucks, right? $870 minus $780 is 90. So they need to subtract $90 more from their cash balance to get it correct. So let's do that. Minus error for the difference, which was $90. That's all I see here. I'll put this there too. Let's go ahead and try it from the book site. So you start with your balance of 24,567. We add in our note that we got money for. Subtract 25. And then you subtract 90. And there we are. Final balance, 27,702. And that's it. Let me center this. There we go. So they are now reconciled. The bank balance equals the book balance. So we went through, what a bank reconciliation was, the important terms, some of the bigger things that you'll see. I went through how to set it up, went through a huge practice problem here to make sure that both sides balance. So hopefully that was helpful. Thanks again for watching, and I'll see you in the next video.